Hello everyone, thank you for joining us today and welcome to this presentation of finding consistent opportunities in a down market. Now we've just recently seen a market that really fell out of bed last night with all the news and the election coming up and then snapped back quickly. But even so, with all the turmoil and a lot of volatility happening and what's going on in the world and with our markets, a lot of people are very frightened, they're very scared, and actually they have no idea of how to actually trade or invest in these markets. Well, today I'm going to show you a very simple but powerful technique for trading down markets and finding opportunities. In fact, if you look at this example right here in PSA, I'll show you a specific pattern and a specific technique that you can use right here just by looking at these three bars, where you'll be able to either sidestep this downward move or else take advantage of it and go short. So once again, this promises to be a great presentation. I'm going to show you exactly how to do it. Also going to show you a ton of examples of where this works. And welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. I teamed up with ProTrader Strategies about 8 years ago, where all I do is present educational webinars and I teach students around the world all the things that I've accumulated in my nearly 40 years of trading. I started trading on the floor of the Pacific Stock Exchange. I was on the trading floor for a total of 16 years. 9 of those years I was a specialist. So that's where you get the name Specialist Trading. Now, if you're not familiar with what a specialist is or what they did, it doesn't mean that you're any more special or influential than anyone else. It means that you were a market maker in a certain amount of stock. So if anyone wanted to buy or sell those particular issues, you had to go to the trader who specialized in them. So that's where you get the name Specialist Trading. I was a specialist during the crash of 1987, so I know what it's like to trade in really down markets. I also traded through the bull market that followed after that. And I left the floor in the mid-90s to manage money, to also teach. And as you can see, I formulated Specialist Trading with ProTrader Strategies around 8 years ago to give you all the techniques and all the wisdom and all the strategies that I've accumulated that have shown a high level of consistency in all these years. So that's what I do. We teach and mentor students in virtually over 100 countries around the world, as well as every state in the United States. And we're really, to put it simply, an educational company. That's what we're trying to do. We're trying to educate you so that ultimately you can make your own trading decisions. So this promises to be a great presentation. I'm going to educate you on how to find some opportunities in down markets, regardless of what happens and regardless of what market it is. But before we begin, as always, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a ton of performance results using these techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Okay, so once again, we are required to show you this. So as you're taking a brief moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there, the abbreviation for Specialist Trading, at SPCLSTTRADG. I post different information on a daily basis, anywhere from daily financial wisdom to actual signals that our strategies have generated. In fact, yesterday I posted a sell signal that was generated in the indices and the S&P futures on the market. Now, even though the market has rebounded and bounced a bit, you could have taken advantage of that last night. And I believe at our initial exit point of this sell-off, you would have made roughly about per contract, about $2,000 per contract if you were trading the E-mini futures. So lots of great information. Feel free to follow us on Twitter. Now, as I stated a few moments ago, we are an educational company. Even though, as I just told you, we provide our students with strategies, it's not about telling you what market to trade, or it's not about telling you what the perfect time frame is, or we're not about telling you, what the perfect day of the week is, or how many amount of shares or futures you should be trading. We're not that kind of a company. As you see here, my goal is to teach you, not to force feed you signals and you basically take your power away. Because it's my opinion that the reason why most traders fail is because you're relying on an outside source to tell you how to trade. All right. Basically, think of your own trading. How many of you go to a blog service every day, or have to wait on the news that's coming out, or have to wait and see what someone says in a chat room or a trading room or even on TV or in a webinar to tell you what to do? This is the way most traders trade, and I'm saying this from firsthand experience because when I first started trading nearly 40 years ago, this is the way I was taught. And trust me, it doesn't work. My first 2 years of trading, I struggled tremendously, and I was doing all the same things that most of you are probably doing. And if you're having difficulty, I know what you're going through. I did myself, and I didn't think I was going to be trading for much longer until I was lucky enough to have some mentors that changed my way of thinking and changed my way of trading. They basically said, in a nutshell, that I have to make my own decisions, and the way to do that is by being supplied with sound fundamental information that has stood the test of time. And so they were the ones who mentored me and gave me this information, and that's what I do with all my students and all of our members at Specialist Trading. I teach them and I mentor them in the same things that have worked for me. These are the same things that were able to turn my trading around and been able to sustain me, I believe, for nearly 4 decades. This is what I'm teaching all my students. So as you see here, my goal is not to force feed you signals, not to tell you what market or what time frame to trade. My goal is to teach you how to trade with a specialist edge so that you can put the power back in your own hands. That's our philosophy at Specialist Trading, giving you the information and then ultimately letting you decide how you want to trade it. Now today's presentation is going to be very educational. As I stated, I'm going to show you a lot of examples on how to actually use this technique for opportunities in a downward market. But because I'm going to be sharing a lot of information, and also because it is going to be held like a classroom, I would like to ask you that if you have any questions, just wait till the very end of the presentation. Many times your question will be answered on the next slide. So, thank you so much for holding off on any questions. And once again, if you came late, just ask questions at the very end, okay? The only question I will answer at this point is the most popular one, and that is this being recorded? Yes, it is. We record all of our presentations. Pro Trader Strategies will send you a link if you have to leave early or if you're having technical difficulties, okay? All right, with that said, why don't we begin? Let's start out. And we're going to start out by talking about candlestick patterns, because that's what this technique and that's what these opportunities entail. We want to look at specific candlestick patterns. And as you see here, these are the basic patterns most people use. I would venture to say that the majority of people have used at some time or are currently using candlestick patterns. And there's a ton of them, anywhere from haramis to shooting stars to morning stars. We're going to talk about a very basic and simple one in this presentation. And we're going to look at dojis, okay? Dojis are very simple and very basic, and here's the standard definition of a doji pattern. A doji candlestick pattern is created when the open and close price are virtually the same. Okay, so you see we open at a price, say it's 50, we go up, we go down during the day, and then we close roughly at 50. Now this action represents indecision on the side of both buyers and sellers. All right, so basically, the market is telling you that no one knows what to do yet. They're pushing and pulling, and we're basically ending up right where we started. So there's a lot of indecision. But here's the one thing that the standard definition tells us. When a doji occurs at the top or bottom of a trend, this is usually viewed as a reversal pattern. So this is conventional wisdom telling us that, we've been going, let's say, straight up, and we are met with a doji. So this indecision is basically saying that the trend is about to end, and most likely you'd want to sell. Now, conversely, it would work this way. As you can see here, these are the common doji patterns that we're going to be looking at. Okay, basically they're all the same, where you open and close at the same price. But here's where the example takes place. Now, as you can see in this older example in Eaton Corp, the trend is obviously down, all right? We're going lower, and what do we have here? Well, we have a doji pattern, okay? Even though the open and close are roughly around the same price at the top of that bar, this is a full-fledged doji. So conventional wisdom tells us that we should buy here, okay? So look what happened. Well, it didn't work out very well, but that's okay. We see, as we are noticing, we still have some dojis here. We have one here and another one here. So perhaps we got in a little too soon, and maybe we just jumped the gun and we do what's called doubling down or averaging down. So we're going to buy some more because we don't need it to go up that high in order to just break even. So you buy some more Eaton Corp, and guess what? Okay. So does this look familiar to anyone? I know it does to me, because this is the way I was taught, and this is the way it happens most likely when you're using candlesticks as reversal patterns. So we have to ask ourselves, does trading candlesticks with conventional wisdom work the way I just showed you? Well, we have to ask, how can we increase our odds for success? Because obviously it doesn't. In my nearly 40 years of trading, I have found no consistency in using candlestick patterns, especially dojis, in their conventional way, because they will work until they don't work. And then you're left with examples as I just showed you right there. So once again, how do we increase our odds for success? Well, we don't want to stop trading with candlesticks. I'm not going to tell you that candlestick patterns don't work, because we employ them in a lot of our strategies. But candlesticks will have a higher level of consistency if you trade them in sync with the trend. Okay, this goes against everything we've ever been taught or learned. We were always taught that these types of patterns are reversal patterns. They're always telling us when the trend is going to stop and reverse. But once again, it's been my experience that there is no consistency trading them that way. There is a higher level of consistency if you trade candlesticks in sync with the trend, as opposed to trying to find the top or bottom of a trend. Now, this brings us to the point, well, we have to look at how to measure what the trend is. I mean, we can't always just look at a chart and say, well, okay, well, I guess we're in an uptrend, or I guess we're in a downtrend. Sometimes it looks like you're going sideways. So how do we know? Well, there are some specific trending tools that you can use right away, that they're free. They're on just about every charting software package. You can use indicators. A lot of people like to use indicators anywhere from moving averages to stochastics. There are patterns you can use. Once again, if you have higher highs and higher lows, that's an indication of an uptrend. And then lastly, you can look at time frames. A lot of people like to say, well, I get my trend from the higher time frame. So if I'm trading a daily bar, I want to go to a weekly bar and see what's happening on that level. If that's going higher, I want to wait and see if the smaller time frame. So these are all valid. They're all okay. But in my opinion, they're just standard. They really don't have that great of an edge. So I know a lot of you can start using these as early as today, but they're not going to get you that far. We want to get a high level of consistency. So how do we do that? What's the best trending tool? Once again, this is something I was introduced to nearly 40 years ago, and it's the PET-D. This is probably the best tool I know of for determining what the trend is. And it's not an indicator. It's a proprietary tool that we have at Specialist Trading that I was taught nearly 40 years ago, and we've made it a color bar tool. So there's nothing you have to figure out. There's no pattern you have to look at. There's no indicators you have to figure out how to calculate. It's a color bar tool. If you have a series of green bars, the trend is up. It's that simple. And conversely, a series of red bars tells you the short-term trend is down. That's how simple it is. There's nothing you have to do. It's based off of momentum. All right, we're keeping it in-house, the actual formula in-house, but all I can tell you is it's based off momentum. And in my opinion, in 40 years, I've never seen anything like it, because it's not predicting what the market's going to do. It's just telling you at the moment, at the close of that bar, it's translating what the market wants to do on a bar-by-bar basis, whether it's a daily bar, whether it's a hourly bar, a tick chart, or a monthly bar. It does not make any difference. It's the best tool I have ever seen for determining the short-term trend. Much better than other standard indicators you find in your charting software, much better than using time frames to determine what to do, and much better than patterns to determine what the trend is. Let me show you what I mean here. Here's the setup we're going to be using for dojis, okay? Because remember, we're just concentrating on dojis today. We're going to look to buy one tick above a doji pattern. It doesn't matter, once again, any time frame. It can be a tick chart. It can be a 5-minute bar. It can be a monthly bar. It makes no difference. But we're going to buy if price trades one tick above a doji bar that is colored green. That's it. That's our setup. We just have to find a doji that's colored green, and we're going to buy if price trades one tick above it. All right, so here's our standard doji. Instead of looking for something that looks like this, we apply the PET-D. And we just want to find it looking like this. It's a green bar, and that's where we're going to buy if price trades above. Now, some of our students like to say, well, Steve, I love this technique, but I only buy if it trades above on the next bar. That's fine. That's okay. Or other students say, you know what, I like to give it a little more time. It's okay if I wait around for 5 or 10 bars before it trades up there. Okay, that's okay too. It's up to you. Remember, this is just an entry technique we're sharing with you today. Now, let's say you want to go short. Remember, we're taking advantage of this opportunity in down markets because as of late, we've seen some very, very strong downward moves. Okay, so how do we take advantage of that? Well, we're going to look to sell one tick below a doji pattern that is colored red. That's how simple it is. There's no, very complicated rules to put together. There's no things that we worry about adding or subtracting. We're just going to look at the color bar. All right. So if we find a doji right here that looks like this, we want to make sure once we add the pet D that it is red. All right. Now we're not going to sell just because we see a red doji. It has to trade below, 1 or 2 ticks below. Once again, it's entirely up to you. If you want to go short, on the very next bar, that's fine. Or if you want to wait, you can wait and wait 5 or 10 bars. That's okay as well. All right, so let's look back at our example that we had earlier. Remember, we had used the doji in its conventional form where we're at the bottom of a trend. Well, this must be a buy signal, right? Well, now let's use the technique I'm sharing with you today. We're going to apply the pet D. And guess what? All of the bars have been red. So we didn't need to wait to find out that we were in a downtrend. We knew well up here that we were in a downtrend. So the pet D was already translating that this is going lower. If it's going lower, do you want to buy? No, we don't want to try and pick tops and bottoms. Remember, that's the way conventional wisdom works in using candlesticks. And it doesn't work. There's no consistency in there, as you saw earlier. So what are we going to do? We're going to sell if it trades 1 or 2 ticks below. So as you can see, now before we were buying that thinking a bottom had occurred, we're just going with the flow and look at all the nice profits we could have made, all right? Now let's say you didn't take advantage of that, or let's say you did take advantage and you covered it and you thought, well, that's enough. It's probably going to bounce now. Well, not really, because we have those 2 other dojis right here. So what would that tell us? It tells us that we can sell just below here and just below here, and once again, more profits to the downside. You see how easy it is to be in sync with the market, whatever direction it's going, but in this case, downward, when you know the trend. The trouble is most people, and myself included when I was first taught, we never want to trade really in sync with the trend. I mean, everyone learns that, but really what it's about is trying to buy low and sell high. And, that's all well and good on paper, but it very rarely works because when you try to buy low, usually it'll go lower. It can always go lower, down to 0 if it wants, And, anyone ever remember Enron? Went all the way down to 0. And markets can go up as high as they want to infinity. So why, would we think that we know enough when it's going to stop, Wouldn't it be a lot easier to swim with the current at your back? In other words, wouldn't it be a lot easier just to trade in sync with the trend? The beauty is, we now have a tool that can tell you, the best tool I've ever seen in 40 years, what the trend is, and that's the pet D. So let's look at some more examples. Remember, I have a ton of examples, and then we'll go over questions about the next half hour from now. All right, let's look at TSS. Once again, it looks like we're in a downtrend. Most likely, the way we were taught, we want to buy with all these dojis here, this little cluster of dojis, right? That doesn't work. There's no consistency. We add the pet D and we see that all of those dojis, all 3 of them are all red. So those are actually sell signals. And right away in the next couple of weeks, we go down 12 points, all right? We didn't need to look at news. We didn't have to go to a chat room for someone to tell us what's going to happen. We just listen to the market. Okay, let's look at H&R Block. Now this was, had obviously some news here at the beginning of the year, and we had a really strong gap down. And at this point, a lot of people are saying, well, you have to take advantage, Steve, of these lower prices. It's way undervalued. It's tremendously oversold. And we have a doji here. So this is where I was always taught there's indecision. So most likely we're not going to go any lower. This is where you buy, right? Well, let's add the pet D. And even before that news came out and we had that large gap to the downside, what was the pet D coloring all the bars? It was already in a downtrend. So this was already telling you well before any news came out, well before the sellers came in, that we're in a downtrend. And obviously, if you're in a downtrend, you don't want to be buying or you don't want to be holding a stock that long, okay? So it gave you plenty of time to exit if you were long prior to this large gap to the downside. And it gave you plenty of time to get in to go short because it continued to go lower and lower. And if you missed that, there were still opportunities, such as in Costco, okay? This is just last September. Obviously, Costco had been headed much lower and lower, all right? A lot of people said, well, This is where you got to take advantage. This is a hanging man doji right here. You got to buy, right? No, all the bars are red. The dojis are red. It's a sell signal, and it continued to go lower. It went down another 8 points. How about GPC? All right, now this one was actually in an uptrend. The majority of the bars were green, but then we were met with a doji that was colored red. Now, even though the next bar was green, it's up to you whether you would like to take this trade or not. Remember, we're not telling you what you should do and how you have to trade. Everyone trades differently. As I stated, a lot of our members say, well, Steve, I wouldn't have taken this because the very next day it didn't go below. That's fine. There's nothing that says, this is a system. This is not, we're showing you a high probability technique. How you decide to trade it is up to you. That's the only way you can become a consistent trader, by making your own decisions. All right, whereas other students I have said, no, Steve, I'm willing to wait for a couple of days. And had you waited a couple of days, well, you would have entered to go short. And it actually turned out to be a pretty good trade. 14 points to the downside in the next couple of months coming into this past week in November. Okay. Now, if you missed it, don't worry. There was another setup right here you could have taken advantage of. Probably made about 10 points off that. And still another one, could have made a couple of points to the downside just a couple of weeks ago. How about CVS? All right. Obviously, it's headed lower. We have a doji. All right. Is it going to bounce back up the way conventional wisdom tells us? Well, if we add the PET D, no, it's red. So the PET D is telling us there is no indecision. There was only indecision on that day, but the trend is still decisively down. So we want to take advantage of that. If we trade 1 or 2 ticks below that doji, we're going to go short. And it would have been a great trade because in the next month or two, coming into this past week again, it's down 11 points. Now, a lot of people have been talking about FIT Fit, all right, the device they make for calculating, your health and your workout routines. It's been having trouble lately, been going down. Now, we have met with 2 dojis right here. So how would we have taken advantage of this in early October? Well, we add the PET D. Now, obviously, the very first doji was green, so that would have not been taken as a selling opportunity, even though that would have worked out. But that's okay. We're not going to tell you that this is a system that works 100% of the time. This is just a high probability technique. So someone sitting here would say, boy, well, Steve, I could have taken advantage of that and gone short, but this wasn't colored red by the PET D, so I missed it. That's okay, not to worry, because just a week later, you're given another opportunity. Another doji appeared, and this one is colored red. So it was now a sell signal to take, and as you can see, it went much lower. But had you held on, well, you could have taken advantage of this nice sell-off on that gap downward move just last week. Once again, we didn't know that there was going to be any bad news about the company. No one called us up and said, hey, Steve, why don't you tell your members to short FIT, because in the beginning of November, we're going to make an announcement where the stock will really gap down. In fact, it's going to be trading around 8 or 9. No one told us. All we did was listen to the market calculated through the PET D. Remember, the PET D translates what the market wants to do. So the PET D was simply translating the market wants to go lower. If it wants to go lower, we're a seller. We're not a buyer. All right, BMY. As we see here, coming into September, all the bars are red. We have a doji that's colored red. So all you had to do was go short, take advantage of the 9 points to the downside. It's that simple. And had you missed that very first setup, there's another one that came 2 or 3 days later, and then another one that came a couple of weeks later. Either way, you could have taken advantage of this really nice sell-off that occurred just last month coming into this month. Now remember, we showed you that chart at the very beginning, PSA, the very opening statements of today's presentation. All right, how could we have taken advantage of this? Well, we have the doji right here, okay? Now, how could we have taken advantage? We realized this is a very expensive stock, but more so than others. This is a $200, $300 stock, but you could have applied options to this, okay? There's no reason that you couldn't have said, well, I'm going to buy some puts, or I'm going to use some type of shorting strategy with options, because guess what? The PET D colored that red, all right? All you have to do is sell once we traded right below there, and as you can see, 35 points to the downside. Now, a lot of people say, well, Steve, what if I don't trade stocks? Can we use this as some type of an indicator or some type of a market directional tool? Sure. Here's the ETF IWM, which is the ETF for the Russell 2000 index. Okay. Let's just say that if you saw some type of a signal on the ETF, don't you think that that would tell you the direction of the market? Well, now IWM was going lower, but we want to make sure, so we apply the PET-D. And yes, the PET-D is saying that it's going lower because the majority of the bars are red, and we have a red colored doji. So that's our sell signal. Now, the market, or I should say the stock, the ETF went down 5 points, but that represented hundreds of points in the market, the actual index. So you could have used this as some type of market defining tool, telling you the direction of the overall market, simply by applying this technique to the ETF. So you can use it in that markets, also other markets. Here's the British pound, okay? Now this is a daily chart of the British pound coming into October. As we can see, the British pound was going lower. The majority of the bars are red, and we have a red colored doji. So what's this telling us? It's not saying that we have some type of support. It's not saying that the economic news around the country is good for the British pound and that's going to make a nice bounce. It's saying that it's going lower, and it's giving us a tremendous shorting opportunity. So had you taken advantage of that, well, guess what? 1,000 pips to the downside. This was the day where they kind of had their flash crash in the British pound, where it spiked lower and then firmed up a bit. But, once again, so many traders always try to play the victim role where, boy, I can't take advantage. How do we know what's going to happen? Well, the PET-D was signaling a downtrend weeks before that happened. Once again, this is the best tool I know of that tells you at the moment what the market wants to do. Now we can also apply this to commodities. Here's a chart in feeder cattle. Now I don't trade commodities. I used to a while back, but I don't trade them anymore. But it doesn't say that these techniques don't transfer just as easily onto them. We see here that a doji is appearing in feeder cattle. All the bars are red, even on this nice little bounce we've had here. A lot of people think, well, maybe we bottomed out, we're going to go higher. No, while we've been going higher, the bars are still red. So this is telling us we are still in a downtrend, and 14 basis points coming into November here in feeder cattle. So we looked at ETFs, we looked at currency pairs, we've looked at commodities. Let's look at the E-mini futures. Here's a daily chart of the E-mini futures, okay, coming into November, just a week or so ago. Now, obviously we've been going lower, and we have a doji here. How do we take advantage of this? We add the PET-D, and we see the last 5 or so bars have been colored red. Most importantly, the doji is red. So this could have told us that we could have used this as a marketing tool, or actually gone short and sold the futures. And in 4 days, that would have been a 35-point gain. Okay, that roughly comes out to about almost $1,800 per contract, just by using this simple technique. You don't have to go to, to any blogs. You don't have to look at any news or any announcements. It's right here in front of you. Keep things simple. This is what my mentors taught me. Keep things simple, and you will get onto that road to consistency. But the minute you start overcomplicating your trading by putting in tons of indicators, listening to all these other pundits telling you what to do, what the market's going to be doing, what this particular stock's going to be doing, that's when you overcomplicate, and then most likely you are lowering, not increasing, but lowering your odds for consistency. Now that was a daily chart just last week. Let's look at a 5-minute chart. And as you can see in the left-hand corner, this was on the 4th. Okay, so this was just last Friday. On a 5-minute chart, as we were going up, we add the PET-D and we see that the majority of bars are green. Now, here's one thing that's interesting. I've showed you how to take advantage of this technique on the downside, but you can also take advantage of it on the upside, because as you see here, we have a doji here and another one right here, and the market continued to go higher, okay? So we can still use this technique where we'll buy once we trade above. So this simple setup right here would have given you an opportunity to make anywhere from 1 to 8 points to the upside. Now, once the market started flattening out here, guess what? This was last Friday. We have 2 dojis, and the PET-D is coloring them red. So this is now, either if you're long, this is your signal to get out and reverse, or if you've been waiting for a shorting opportunity, just to use this to go short, and a quick 10 points to the downside. See how easy this is? You just look at the color to tell you what the trend is, and you apply some type of structure. And there was another opportunity later on, if you missed that, roughly in the last half hour of the day, you could have made 4 or 5 points. Now, as I just showed you, you could say, well, boy, I saw that in a 5-minute time period work on the upside. So does this trading technique also work with uptrending markets that are maybe daily bars or weekly bars? Sure it does. Let me show you some examples here. All right, we're looking at this eBay example, this older example here. We have 2 dojis. Now, the market has obviously been going higher. Conventional wisdom would say, well, that's indecision and it's a reversal pattern, so you should be selling here. Once again, if it doesn't work when it's going lower, it won't work when it's going higher because the trend is up. As you can see, both these dojis are colored green. So you want to use this as buy setups, not sell setups. And the stock went up 7 points and had a really nice gap once again off some news or something that happened. We didn't know it, but the Pet D had told us that it was going higher a month ahead of time. Okay. Yelp, as we can see here, this is an example of a doji where it didn't happen right away, but if you want to wait, this student waited 3 or 4 days to get in, and there's where you would have entered, and then once you entered, look what happened. In the next week, it gapped up 7 points. News came out, something happened with the markets, we had no idea, but the Pet D was telling us well before that happened by being green, well back here. All right, as we look at this chart here in Hershey, we can see that it's been in an uptrend. All right, conventional wisdom tells us we want to sell high. So someone would say, well, this is where you want to sell, right, Steve? This has gone up too much. It's due for a little snapback to the downside. Well, here are some dojis. Do you want to sell them or not? Let's add the Pet D, and they're all colored green, so this would have been a nice buy right here. And these ones are colored green. And look what happened to the stock, up 23 points in 1 day. Don't fight the trend. If there's one thing I can leave you with today, it's to always be in sync with the direction of the trend. Do not ever try to swim upstream. Take it from someone who's been there. Once again, I was on the floor. I tried to always be the contrarian. Sometimes it worked, but most likely when it didn't work, I gave everything back. Trading is not supposed to be that way. Trading is supposed to be consistent. 2 steps forward, 1 step back. But the way most traders trade is, 1 step forward, 3 steps back. So we're trying to get that consistency back in your trading. The best way is to trade in sync with the trend. And the best way I have found out what the trend is by simply applying the Pet D. All right, here's an example in BIIB. Now, here's an example where sometimes you have to wait, but as we can see, all of the bars are green. We have a doji right here, so this is a buy setup. We want to buy, right? But it has to trade above. This is the importance of that setup. It has to trade above there. We don't want to just buy at the market. So where that dotted line is there is where we're going to buy it. And look what happened. We gapped lower. So had you just simply said, well, you know what? I'm going to beat the gun. This is going to go higher. I'm so excited. I'm just going to buy at the market. You would have lost a lot of money. That's why we stress that it must trade 1 or 2 ticks above the high of that doji if you're buying. So look what happened. Some news came out or something happened, so it was a good thing. Even though we were in an uptrend, it quickly changed, but that's okay. We didn't get hurt because we were never in the trade. So now we sit and we see that all the bars are red, and we're looking for dojis, but there are none, and then things change. Now, as you can see, we're starting to snap back, and the majority of the bars are green, and we have a doji. So here's a second chance to get in long, but we can only buy if we trade above. So there's the next bar we would have entered, and 80 points to the upside. So the way most traders trade is this way. They'll buy here, it'll go against them, they'll sell, and they'll think, we're going straight down, I'm going to short, and then it turns around, and then they short more, and they're always on the wrong side. Even if they're trying to track the trend, they're always a day late and a dollar short, because most trending tools are lagging tools. The beauty of the Pet D is that it oftentimes, not guaranteed, but oftentimes tells you in advance what the market wants to do. All right. Now, obviously, it didn't tell you in advance that we were going to be going lower, but that's okay. With the rules and the techniques that I teach you, you would have never been hurt because you never would have entered into the trade. Now, in this setup here, you would have entered on the next day, and you could have taken advantage of these 80 points. Here's another example in the QQQs, another ETF that follows the NASDAQ. As you can see, we've been going higher. We are met with a doji. Most people would say this is where you sell. This is where the top of the market is. But not according to this technique. The doji and along with the pet D is telling you the market's going higher if we trade above, which it did. And it went up the next month 6 points higher, which represented hundreds of points in the NASDAQ. Now here's a great example in crude oil. A lot of people like to trade crude oil. Here's a great example of how you can just change with the ebb and flow of the market. Here was a sell doji, colored red by the pet D, and see how great that worked? You had all this room to take advantage of the points to the downside, and then once the trend changed, you could either cover, or if you were not short, you could decide to go long because there's another doji, and taking advantage of the swing to the upside. So we change with which direction the pet D is telling us the market wants to go. Remember, we're not determining where a high is. We're not predicting where a low is. We're simply listening to what the market wants to do and then jumping on board. If the market wants to go higher, we're going to be buyers. If the market wants to go lower, I should say, we're going to be sellers. It's that simple. Now here's another chart of the E-mini futures, okay? Now this is a daily chart. We had gone higher and we had a doji. Instead of using it as a reversal pattern, we simply used it to go long. And in the next month or two, coming out of summer, the E-mini rose 100 points in just 2 months. Now, 100 points doesn't seem like a lot these days, but that represents over 700 or 800 points in the Dow. So you could have used this as a directional tool for what you thought the market may be doing. And as we look at this 10-minute chart here, a totally different example to the downside now because the majority of the bars are red. But we have a green doji right here. Do we want to buy that at the market? No. The same principles apply whether we're looking at a daily chart or a 10-minute chart. We have to trade above that. And as you can see, we never did. We never traded above the high of that green doji. As we're waiting, we are now met with 3 dojis that are all colored red. So now we're sellers. We're just changing with the market. We never try to tell the market what it's going to do. We let the market tell us what it's going to do, and then we apply some technique that allows us to get in the direction of what the market wants to go. So as you can see here, we could have gone short, and that's 20 points in just 3 hours. Why? Because we didn't buy here. We waited for it to trade above, which it never did. And then while we're waiting, we have a technique to go short to the downside. So we just went short. We just reversed and went in the direction that the market wants to go. So that's roughly about $1,000 in just 3 hours per contract had you taken that setup. Let me show you what happened this past Monday, okay? Since we're talking about markets and different directions, this was actually an upward example here. This is a 10-minute chart of the E-mini S&P just 2 days ago. Now, here we see this is on the 7th in the lower left-hand corner. We're trading roughly in about the first hour, 2 hours of the day, and we're going higher, and the pet D has been green the entire time. The very first 10 minutes of the day, it was green. And we're met with a green doji. Rather than what most people would do, would say, okay, now it's time for a reversal because we're kind of met with indecision and we've been going higher. We're going to go with it. And had you stayed in the trade the entire day, that's 600 points to the upside. And, you know, we're not saying that you have to take that. You could have said, well, I'm going to take 1 point and get out and say thank you for the rest of the day. Remember, you're going to make the decisions, not us. We give you all the different options, the different techniques of where to exit, where to enter, but ultimately it's going to be you to decide. I'm not going to say this is where you enter, this is where you exit, and you must trade it that same way each and every time. That, for me, is a recipe for a disaster. I don't know why people do that or go to chat rooms and follow what someone else is doing, because everyone is and should trade to their own needs, things that make them feel comfortable. So we give you all the tools and techniques and then let you decide how you want to enter, how you want to exit. Now here's an example on another direction of the E-mini going down, okay? As we can see, we're headed lower, and we have dojis here, 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 all right? Now, someone would say, well, we've got to bounce back up, right? It's a reversal pattern. But once we add the pet D, we see, nope, these are all sell patterns. Had you taken advantage of any one of those, well, you could have had a nice profit, and there was another one there, taking advantage of that, another one, and as you can see, it just goes on and on. You know, someone looking at this would say, well, yeah, it's easy to see in hindsight that you should have sold. That's true. Anything's easy when you look back in hindsight. But remember, the pet D knew well before the sell-off back here that it was going lower. That's the beauty of the pet D. It can often tell you in advance what the market wants to do. That's because it's so sensitive and it's not predicting anything. It's simply translating what the market wants to do. 52 points in one day. Okay, that's not bad work. That's $2,700 per contract had you decided to trade just one contract and stay in the entire day. And we can switch to other markets. Here's a currency pair, the Australian dollar, where majority of the bars are red. We have a red doji to sell and 130 pips to the downside, okay? $1,300 in roughly about a month or two. And we can go to a 10-minute chart of the Japanese yen. I know we have a lot of traders who trade Forex pairs intraday. Well, we were down. As you can see, the majority of bars were red. Then they switched to green. How could we take advantage of this? Well, as we were going lower, there's a sell signal using the red doji, and you could have worked with 60 pips in your favor to the downside. Once the trend changed up, you could have taken advantage of 70 pips to the upside. All right, so as we close here, I want you to ask yourself, and please ask yourself honestly, do you think this edge, this technique I just shared with you and taught you could have helped your trading this past year? Even if you say, well, Steve, I don't trade that way. I have to look at news or I have to look at certain indicators. Okay, just the concept, though, of not trying to pick tops and bottoms. All right, just do you think that could have helped you? Look back at your last 10, 20 trades, and if you try to trade that way, ask yourself, is it really consistent? Does it really help you make money? I know it didn't for me, and I think there are some traders who are able to do very well trading tops and bottoms, but they are the minority. They're not the majority. I would say they're only maybe 5% or so of most traders. The rest of us, myself included, have a very difficult time trading that. Wouldn't it be a lot easier to just simply trade in sync with the trend? Now, some of you say, well, Steve, I find this interesting. Does this work on other candlestick patterns? Well, sure. In fact, let me show you this. Here's another example in Hershey. As you can see here, someone would say, well, there's no trend in here, Steve, so I'm not going to do anything. You say to trade with the trend, right? We're just basically going sideways. We're in a range pattern, so I'm not going to do anything. But what do we have here? We have a bullish engulfing pattern. Well, I've always been taught that that's very bullish. That's where you got to buy, right? So maybe I will buy here. We're probably at the bottom of some type of sell-off, so I think I'm going to buy here. And, I've always been taught, in fact, the course I took in candlesticks says that the bullish engulfing pattern is one of the most consistent, one of the best patterns there are. It's basically a little mini reversal, all right? Let's add the pet D, because the same concept that we use with dojis can be transferred over onto virtually any candlestick pattern. And in order to buy, what must the bars be colored? They must be colored green. And as you see here, the last 4 bars, including the last 2 bars of the candlestick pattern, are red. So as a student of specialist trading, would you be taking that long signal of a bullish engulfing pattern? Even the very name suggests bullish, that it's going higher. Would you be taking that trade? Absolutely not. Why? Because the market, not me, not some guy in a chat room, not some guy on TV, but the market is telling you it wants to go lower. So you would have bypassed this, and as you can see, the stock fell the very next day 15 points in 1 week, okay? So this is the beauty of the techniques we teach you. To trade in sync with the market, but most importantly, to listen to the market, not to outside sources. Whether it's some guy who's been trading 40 years, such as myself. Remember, I don't tell anyone how to trade or what you should buy, what you should sell, like people do in chat rooms and trading rooms. I give you the techniques that work and then mentor you so that you can use them and make your own decisions. All right, so let's recap. What did we teach you today? Only buy or sell candlestick patterns. In this case, we mainly talked about dojis that are in sync with the pet D. This is what's really going to increase your levels for consistency. If you really wanted to be a consistent trader, this is what's going to take you over the edge. This is what's going to get you in sync with the market so that any candlestick pattern, any strategy you may be using with candlesticks will have a higher level of consistency because you are in sync with the trend. And the best way to be in sync is by applying the pet D. Now, important points to remember. What I just shared with you today was not a strategy, not a system. All we talked about was a very high probability edge, okay? Applying a specific candlestick pattern with the trend. But we really didn't talk about entry signals. We didn't really tell exactly. I mean, we said 1 or 2 ticks above or below, but we didn't, go any further than that. We didn't talk about where to place your stop, because sometimes you got in and then it went the opposite direction, but it still would eventually turn out into a good trade. But where do you protect yourself? And then we didn't talk about where to get out. Some of these trades would have given you phenomenal amounts of money here, but where would you have exited? Would you have stayed in the entire time, or would you have gotten out quickly? How would you know where to exit? And then lastly, money management, extremely important. How many shares should you have traded? How many futures contracts? Extremely, extremely important to know your position size. These are all extremely valuable pieces of the puzzle that we didn't cover. All we talked about was a specific way to trade, in this case, the doji candlesticks, but virtually any candlestick pattern. Well, here's what we're offering to all of our attendees today. A great discount on one of our best packages. It's our Candlestick Combo. This is our strategy number 5. It's a candlestick strategy, okay, along with the Pet D. This is a candlestick. This is one of our most consistent packages. It combines candlesticks with the Pet D. Now, the strategy I just shared with you, today with the dojis is not what's in the strategy number 5 format. I just shared with you a technique that you can apply. Strategy number 5 is entirely different. Now, you get instant course access. We're going to teach you all the entry points, all the different entry points, all the different exit points, all the different stop placement, so that you can make your own trading decisions. Remember, that's our philosophy. We're not a system-based company. We don't tell you this is the only way you can trade it. Everyone has to do the same thing. As I stated earlier, that, in my opinion, is a recipe for a disaster. If that works so well, then why aren't 80 to 90% of all traders successful? It's the other way around. If it's so easy just to mimic the successful traders, then why can't the majority of us do it? It's because you take yourself out of the game, and it's, as I stated, it's almost impossible to mimic how someone else trades. You have to be given the tools and the information. You have to be taught and mentored, and then make your own decisions. That, in my opinion, is the only way one becomes consistent. So the good news is we're providing you all the tools and information. We're going to provide you with signal alerts. We're also going to give you the 4 Pet D trading techniques included with this strategy. All right, and this includes both add-ons. In other words, you will get the up and down buy, sell, and sell indications for the strategy, as well as the Pet D tool, which will automatically color your bars. And lastly, this comes with mentoring correspondence. You're going to be my student. I'm going to be sharing with you all the things I've accumulated in my nearly 40 years, and you can ask me questions and get information back from me whenever you'd like. Now, what we're doing is offering you this. This usually runs close to $3,000 to $4,000. We're dropping the price down to a one-time fee of $14.95 plus $97 per month, but this is for a limited time only. Now, if you want to just take the entire package and not have to worry about making that payment, well, lifetime access to both courses will be $29.95. Okay, that's dropped in price as well. I believe if you bought them separately, it would be closer to $4,000. If you're serious about taking your trading to the next level, please take advantage of this. Okay, this is a great time to call up Pro Trader Strategies. They can set you up with this great deal. Here's how to contact them. You can either email them at trading@protraderstrategies.com, call them directly to set up that payment plan at 310-598-6677, or as you see here, that's the link that will automatically take you to the discounted price for everything that's on the bottom of the page. But as you can see, that's not a live link, so you just have to copy and paste that. But if you look over on your chat box on the far right hand corner, there is a live link there, so you can click that on and get more information as well, or sign up. It will take you directly to the sign up page. Okay, so I'm going to leave this information up. I strongly urge you, if you want to get back on course with your trading, we're coming towards the end of 2016 here, and I can almost guarantee that most of you are nowhere near where you wanted to be at the beginning of the year. Here's your chance to get back on board with our very, very consistent candlestick combo. Okay, that's strategy number 5, candlestick strategy, along with the Pet D. Okay, so I'm going to leave this up here as I open up the question and answer box. Also, thank you so much for holding off on any question, but as promised, we still have 10 or 15 minutes here to answer any question you have. Question, Bern asks, hi Steve, does it work on any time frame? Yes, it does, Bern. Maybe you asked this earlier, but I showed you like 5-minute charts. We looked at weekly charts, any time frame. I use it. I have used it on tick charts before. It's up to you. All right. So there virtually is no time frame or market that you can't apply this to. Okay. So that answers your question there. Let's see. Ricky says, are you using the 50-period simple moving average as a filter? Did not see it on your charts. That's a good question, Ricky. For those of you who aren't familiar, we apply the 50-period moving average to tell us what the overall trend is. I've given presentations on this before, and it's the simplest and most, I would say, the easiest way to find what the overall trend is. And that's just apply a 50-period moving average, whether you're looking at a 5-minute chart or a monthly chart. Always have a 50-period moving average, and if price is below, the overall trend is down. If price is above the 50-period, the overall trend is up. Now, here's the beauty of applying the PET-D. The PET-D is so sensitive, it's so much more sensitive than the overall average, so it really tells us what the short-term trend is doing. So if you like, you can apply both together. You can see what the overall trend is and the short-term trend with the PET-D and use those in sync with each other to have a higher level of consistency. Or, once again, we're not telling you how to trade. Some of our traders, such as the examples I just shared with you today, just use the PET-D. You don't even have to apply that. So in the end, the answer, Ricky, is it's up to you, all right? We're not going to tell you how to trade. It's up to you. Both have high levels of consistency. One is a little bit more conservative. That's by using the 50-period in conjunction with the PET-D. Another one is a little bit more aggressive, but in the end, it's your decision. That's why we give you all this and then ask you to paper trade for a while so that you'll be able to make your own decisions on how you want to apply it, okay? Let's see, DT is asking, is the doji technique you just showed, is that your strategy number 5? No, DT, I just answered that. I said that we showed you this technique. That's not what strategy 5 is. It's entirely based on another candlestick formation. But it's the same concept. We're using this in sync with the PET-D. So we're always going to be in sync with the PET-D. It's just another candlestick strategy. All right. I gave you this thing with the doji today for free. That's yours, and you can start using that as early as today. You'd have to apply some type of trending filter. But as I stated, the best trending filter I know is the PET-D. So now why not just get the best? It's the most consistent I've ever seen. I mean, I've been using it for, like I said, nearly 4 decades. So it's helped me with my personal trading. Why would I tell you to use something else? And as I stated, it's a proprietary tool based on momentum. I use it in my personal trading. I've been using it when I was on the floor. The beauty of it now is that when we were on the floor, we had to calculate it by hand. So it was so difficult to do because by the time you calculated, another bar was forming. So we were really, sidelined. We could only use it for like longer time periods, like daily bars. But now that we have, programmers and high-speed computers, excuse me, we programmed it into a color bar tool. So there's nothing you have to calculate. It's automatically there for you. So along with the PET-D, we give you 4 separate trading techniques. So there's a lot of great information so that to help you get on your way. And I'm there with you every step of the way. I'm using it myself, and I'm also, teaching you the same thing. So if you really want to get on board for 2017, I strongly urge you to call Pro Trader Strategies. They market, promote all of my courses and techniques. They can answer questions as well. Even if you're just, interested in it, give them a call. They can fill you in with more information. And there is absolutely, nothing required. You can ask them for more information. But remember, if you want to take advantage of that special attendee discount, I would jump on board that as soon as possible, because the longer you wait, it might go back up into $3,000 or $4,000. So you take advantage of it now. And they have payment plans, so they can work with you on that. Okay. Okay, I see there are no other questions. As you've just seen, this technique and the PET-D works in any market, in any time frame, and in any direction. It is a tool I've been using for just about 4 decades now, okay? That's how strongly I believe in it. That's how much it's helped me and sustained my trading. So I wouldn't want to teach anyone something that I don't personally use myself. And I show you exactly how to apply it. The beauty in this course is not getting some proprietary technique and then trying to figure out what it's based on. The beauty is having someone teach you the correct way to apply it. And that's what I do in the course. I'm there with you every step of the way. I know a lot of you have been struggling this past year. You're nowhere near where you wanted to be at the end of 2016. Here's your chance to get back on board, okay? Start 2017 off with consistency, okay? Get back on board so you can really feel confident in trading again. I want to thank you all so much for attending today. I wish you the best of luck in trading. I really look forward to you becoming students of mine at Specialist Trading with the Candlestick Combo. Thank you so much. I'll see you next time. Bye-bye.